Thank you for joining us. And look who's joining us, Ajay Srivastava, CEO of Dimension Corporate Finance.
Good morning.
We're getting you at 9:30 so that there is no issue about you coming late. We've changed the time so that it fits you.
Thank you so much. You're so kind.
But is it too late for those who missed the party in the month of May and June to come now?
Oh, it's never too late. See, FOMO is the worst sin to have in the world. It's never too late to come to the party, depending on what drink you pick up on the party. So I think if you're going to pick up and do bottoms up, this is going to be a problem. If you selectively pick up and be there for long haul, I think you're fine. But the key is time yourself correctly because the returns come with timing. If you come too late to the party, remember you get leftovers.
Okay.
Right. So let's go per drink and per time horizon. Ajay, what's a good drink to pick up right now for, say, the next 6 months and the next 3 years?
When we've spoken before, I think fundamentally we are of the philosophy that unless there is a very compelling story emerging in the company, this is not the time to pick up anything at this point of time. Doesn't matter what it is, sometimes very good, unless you really know it's a very good, compelling story. And the reasons are very simple. That our threshold of making a return per annum is not less than 20-22% at the end of the day. To get 22% return from stocks from these levels is going to be a tough ask, and you need to wait, be patient. Market has given you two good opportunities in the last 12 months. If you look at it, even today, 75% of the stocks have not come to the value they were when the market was at high in September. So you got to be patient. Doesn't matter if few things run up 2%, 4%. But my personal view has been that this point of time is unless story is very compelling, you've been totally out of the market, yeah, sure, go buy it. But this is not the flavor of the season to go buy. There are a few select stories we are still buying into, I'll be honest to you. There's an automobile company whose demand is skyrocketing. If you travel around Punjab, etc., that company's demand is like incredible. So you still buy a few stories. But broadly speaking, I think hold your fire, keep your money in the bank or wherever you read, trust, wherever you want to keep it. You will get chances to buy. To make 20% from this space is not going to be easy.
Today morning, we are talking about party and drinks. I don't know what kind of weekend you've had, but let's say for a teetotaler who does not believe in drinking, what should the teetotaler do?
My God, change, change. Need a simple change. Well, you're going to missing out, and I don't know how many people follow Osho. I do, and the guy used to tell you that you have been sent to this earth. The God will going to ask you when you go back is not for the sins you've done, but why have you not enjoyed your life on the earth. So I think if you're not, it's a valuable time to start it and look at Osho's teaching. I think it teaches a lot about what to do here.
Not read Osho, so I don't know comment on it, but I'm just going to swing it and talk about perhaps this auto company which you think is having a party. So let's talk about that. Now, if you don't tell others to make money, then that's also a sin, no? So just tell us the name.
Unfortunately, the regulatory guidelines do not allow me to say it. Nikunj, you know it very well than anybody else, so I can't pinpoint. But it's not difficult to guess what's happening in the market. There's only one auto company which is standing out among all players. I think only one. You don't have to be genius to guess which one it is. And that's got traction with a serious kind, both on the farm side, both on the auto side. It's incredible story going out there. And I think, and that group has focused itself well. It has got value sitting in other companies. So by and large, their story fits into the narrative that they are gaining market share more than just the demand growth. And that's the narrative in the market. Demand is not growing as much as the thing. And you saw what happened in the retail story. We discussed last time when I was on the show with you that the retail companies are projecting obscene number of growth rate, and you saw it all came down. So market is not giving you the growth traction what the PE valuation is requiring them to do. And that is the dilemma of an investor today. Ps are telling you a story of 25% growth. Companies are growing at much less than that. So what are you going to do about it? Go with the SIP model and keep investing at this high rates, or sit quiet, wait, and then find a time when you can invest and make a good return out of equity markets. Equity market is not about investing every day of the year.
But Ajay, do you think names like M&M can give returns for the next 6 months also? I know for the long haul, this is one of those core portfolio stocks. But for someone who's jumping in now, does it make sense?
Well, equity is a risk market. Let's be honest about it. It's not a debt market. You're not doing an FD out here that you will get an assured return. So yeah, it's a risk market at the end of the day. You work with probabilities. So what's the probability of a company whose product is in demand, short supply in the market, phenomenal work being done on margins and cost pressures? I think what's the chances that he will score over others and shareholders will reward him. The probability is higher. It works of probability. It's not guaranteed. It's not the thing. The probability of such companies, and there are companies in autos, ancillaries, engineering, there are hotels, there are all kind of companies in the space which do exactly this model. They're doing very well, performing, executing well, and your probability is that shareholders will reward them differentially compared to the rest of the industry. And that's the stock picking game, is find out which is the most probable one to go up. But having said that, I think timing of your entry, I keep repeating, it'll dictate what returns you make. If you end up making 10% returns by taking equity risk, you've done a disfavor to yourself of a sleepless night for nothing. Then go buy a debt instrument and sleep better than just buying equity and making 10% return.
All right. Hi, Ajay. Morning. This is Shrishti also joining in.
Good morning, Shrishti.
Good morning. But Ajay, one of the other events that happened in the Indian market was actually the SEBI's interim order on Jane Street. How do you see that impacting the F&O volumes of the Indian markets right now? Do you believe that their party is indeed over? And maybe it's time for some of the other large players wherein SEBI can actually be looking forward to. Is it the right time to do that? And what does it really tell you about the kind of actions that SEBI intends to take right now?
You know, let's be honest, every market in the world, including US market, had these problems of being a bad guy is the thing. You remember Milken, who was there, the infamous king who, okay. At the end of the day, every market will have its bad apples. We still don't know what's going to happen legally. But we are in an era of algo trading. We, like it or not, machines trade faster than humans. They decide faster than humans. They analyze faster than humans. That's a fact, all right? Now, the question remains that did a player become so dominant that he could influence the market? And if it did, and whatever comes out, he should be penalized. I don't think so. It's going to impact, barring temporarily, F&O volumes by and large, because there are different institutions. There are 150, 200 people who want to play in this market, large institutions, a couple of million individuals and HNIs and portfolio officers. So it's not that market is people are going to run away from trading. The issue comes back to what happens to the SEBI regulators. I think if they want to come down heavily on F&O trading, algo trading, sure, the volumes will go down. Long term, I don't see a reason for them to do this. Let them open the market. It's given you depth in Indian market. We have been able to trade and become a global trading destination. Why do you want to destroy it? You saw what the previous SEBI chief did, was destroying volumes left, right, and center. I think we need to open it up. Temporarily, yes, there could be a shortfall, but I think broadly speaking, F&Os give depth to the markets. You got to still rein in the bad guys. That's all right. That's the job of SEBI. That's why they created for it. But this will always happen. Bad guys will happen in the system. But that doesn't mean you throw the baby out of the bathwater at the end of the day. Just because a plane crashed, you don't mean that you don't stop flying, right? Similarly, just catch the guy, penalize him, show him this thing, who the brokerages who are part of it, penalize them heavily, doesn't matter. Make them an example that no one dare do it again. If they've done wrong, they pay for it. But that doesn't mean the market is going to die down. The market is much bigger than all of us and all of the institutions. So don't worry, party will remain, and it's just started. You remember this? Less than how many percentage, and I think Nikunj is good at maths, can tell me how many people actually participate in F&O market in this country of a 1.3 billion people. So it's a long way to go, believe me. It's a very, very long way to go.
So, Ajay, in this decline, if brokerage stocks they fall, which they fell on Friday, and otherwise they've been going through this numb patch because of the new SEBI restrictions, would you be a buyer in brokerage stocks? And a whole a bunch of them are there, from Angel to even Novama to, for that matter, even Motilal Oswal.
See, you do got to differentiate between brokerage stocks and wealth management stock, because some of them, like you named some of them, have become quasi both brokerage and wealth managers. You would tend to invest on the side of wealth managers because that's the business which is growing and growing leaps and bounds. It's going to get competitive, margins are going to go down, but the volumes are growing tremendously. And as it becomes more difficult to make money in the market, like say right now we are sitting there at the point of time, people are going to go to the professionals and say, okay, park my money. PE industry has shown globally that returns up to upwards of 25% per annum are a norm in the PE industry in equity, not an exception. So while, so therefore, I think that people who are doing wealth management will keep growing. People, pure brokerages, I think it's a no-go because that's a no-way street to make money. You can't make money on brokerages anymore. So standalone brokerages are not going to work for you. We are not going to invest there. But wealth management companies, answer is yes. But again, live with volatility. So like one of the stock you named, was down almost 40% in September after the bad result and in the December quarter. And then it has recovered back almost everything. Now, question is, when were you the buyers? Were you buying at 900, 600, 700? Or did you buy at 9, sell at 600 and wait till 900? What did you do? So question is, wealth management companies, very interesting buys. But again, do not buy at a market peak. You will get a chance to buy these companies at a much cheaper valuations. Wealth management is in, brokerage is out.
Okay, on that note, we'll let you go as well, Ajay.
Thank you very much.
Thanks for your
You have a
time
good
as
week.
always. You too. And in